The European Union and the United States have agreed to impose the most extensive sanctions on Russia since the Cold War. The measures include denying Russian state-owned banks access to European capital markets. Well, joining me now to talk about it is our capital markets correspondent, Thompson. Christopher, just how serious are these new sanctions for Russian banks?
Well, to date, the criticism of the sanctions about Russia is that they were mostly talk and not much bite. But yesterday, arguably, was the day that they really started to bare their teeth. Russian banks, state banks, according to Morgan Stanley, have about $33 billion in foreign debt coming due just over the next 12 months, and private banks, another $20 billion due on top of that. So according to some estimates, if you take away the US and EU capital markets from Russian banks' funding capacity, that cuts about 90% off. Now, short-dated debt is still allowed in the EU from Russian banks, but of course investors are going to be demanding higher costs in order to take that debt on, given the heightened political tensions.
Now, if we take a look at this chart, we can see the extent to which Russian state-owned banks have accessed the European capital markets. Just talk me through the data and give me a sense of just how important EU capital markets are for Russian banks.
Well, really, since the financial crisis, as you can see, they've become an increasingly important conduit of finance for the Russian banking sector, both in equity issuance and also bond issuance. There's already been an effect this year because this saga has been running now for many months. We can see that equity issuance by banks is nil, and bond issuance is less than half year to date compared to what it was at this period last year. So it's already exacted a heavy toll.
But of course, Russian state-owned banks don't have to go to the European Union capital markets. They could look beyond to Asia, but there might be some costs in doing so.
There are, and one has to question the size of those markets in Asia and the length of funding. Of course, one could reasonably surmise that with EU and US markets access now severely restricted, well then Asian lenders are going to demand themselves higher rates in order to lend to Russian banks. But also a more fundamental question is, are those markets deep enough for what Russian banks' funding needs actually are? Maybe in the long term they will deepen and become a kind of viable alternative, but shortly in the short term, most analysts think that this is going to have a severe impact on Russian banks' ability to lend, to invest, and to do deals, ergo on the Russian economy itself.
So uncertain times ahead, but for now we'll have to leave it there. Chris, thanks very much.
Thank you.